we are no longer making progress towards the Fed's 2% target. I mean, earlier in this year, you could still point to some progress. Right now, I'd say it's more that we've stalled out. And there has been a really robust conversation about tariffs and how this could be a temporary factor. I think you do see that in the goods inflation. I think it's going to take a long time for that to work its way out. That'll be a lift to inflation. To me, the part of the PC inflation in July that was really disconcerting was on the services side, in particular the non-housing core services, what the Fed refers to as super core. We really looked like we were making some progress earlier this year, and it is just not. We're back up at a pace of inflation in those categories. It's just not comfortable, and is not pointed in the right direction. And it's a lot harder there to point to tariffs.
Claudia, not going in the right direction. Is the environment ripe for a rate cut at next month's meeting then?
So I thought Chair Powell did a really good job last Friday at Jackson Hole outlining the risks to the economy. And this is a challenging economic environment. The dual mandate is in tension. There are reasons to expect inflation to go even higher from where it is right now. It's already elevated. And there are reasons to be worried about employment really going lower and having some deterioration in the labor market. And so it is a matter of sifting through every bit of data and trying to get a sense of what that balance of risks is, because there's no path for the Fed that will check both boxes. Like, they are in tension. So I agree with the assessment that, doing maybe an insurance cut in September, kind of trying to stay ahead of the labor market weakness makes sense given where the Fed funds rate is. But I don't see the case to be signaling, like Fed Governor Waller did last night, that we're like lining up a whole sequence of cuts. I have a feeling we're going to be like in this back and forth push and pull of the inflation employment data probably through the end of this year.
Well, you make a great point. I mean, you consider the fact that you have the dual mandate, the two sides in conflict. We haven't been in a dynamic like this in a while, Claudia. And that was going to be my question to you. If we do enter a situation where, okay, you have the labor market weakening, but you have core inflation stuck maybe closer to 3 than it is to 2%. I mean, realistically, how much room does the Federal Reserve have to cut rates? And if they're stuck in a stop and go situation when it comes to rate cuts, I mean, how much are these kind of one-off 25 basis point cuts actually going to matter in this economy?
Right. Well, as Powell mentioned last week, with the unemployment rate as low as it is, and in particular as stable as it's been over the last year, they can proceed carefully, right? So, and a 25 basis point cut at one meeting, maybe we cut again soon, maybe we don't. Like that's what carefully looks like in Fed world, right? Now they absolutely have the space. If things in the labor market were to really start to gain downward momentum, the federal funds rate's above 4%. There's a lot of room to cut. There's a lot of room to respond if they need to, and they'll switch gears. But the data they're not there yet. We're talking about risk. We're not talking about it's happening. And so I think they're in a good place, but my goodness, it is so hard to catch the economy when it's turning. And it could be, we talk a lot about the labor market as a potential turn, but you could have inflation take off. And, like these kind of moments where you're trying to get that right, that's very tough. And, they may get it wrong, but I think that's where like being careful and deliberate is going to be the strategy that works for them.
And Claudia, we have a kind of pretty strong set of data that we're going to get before that September Fed meeting. What are you keeping an eye on? What can kind of vindicate the push to do a quarter point cut in September, or what could actually kind of throw those plans astray?
Right. Well, the logic of the setup for the September cut is more in an insurance space, right? It's about risks. So we've got one inflation print, one employment print. Is that going to like totally change the picture of risk? Probably not. Like the employment report last month was a game changer, but that is a very rare occurrence. And we shouldn't expect getting that kind of like news in one release. So I think, they're on a path to be able to do a cut in September. I fully expect we're going to see dissents. Like this is a tough one. Like I can see reasons to be concerned about on the inflation side. We're going to get stuck at 3%, so I think we'll see some differences of opinion and differences in votes. And that's a healthy thing. And it just just underscores like this is a tough environment for them to decide. I think of the two reports, probably the employment report is going to give more kind of signal to what's the right thing to do. In all likelihood, we're going to get another inflation report that's firming up, and they're going to have to be able to make the case we are cutting as inflation is rising. And I think they can, but that is not a typical moment for the Fed to cut.
And of course, all eyes on the Fed at that FOMC meeting next month, not just for the rate decision, but also for the politicized nature of what's going on at the Federal Reserve right now, Claudia. And you think about what's unfolding right now in D.C. We know that Fed Governor Lisa Cook has sued President Trump over his attempt to oust her from her position right now. And Claudia, I mean, we've been discussing with each other what's going on when it comes to this administration, the pressure that it's trying to exert on the central bank. What sticks out to me is the apparent non-reaction that we're seeing in markets right now. I keep hearing that the worst case scenario is we end up in a situation that pressures the long end higher. But Claudia, we're just not seeing that kind of stress come through.
Right. We are in uncharted territory. It is hard for investors, particularly kind of a mass of investors, to kind of really see where this could go, right? Like this is just a level of creativity that maybe financial markets don't typically, and foresight that they don't typically have. I think this is a real risk. What has happened this week with Fed Governor Lisa Cook, to me, that's just the latest in a series of efforts by the White House to gain more control over monetary policy. And they've been very clear what they want if they get more control, and that is ultra low Fed funds rate. And I think at this point, this is something that the Fed itself, when it talks about what are the inflation risks, a Fed that is no longer independent, like that is in the mix now, which is just really shocking. But, if control is lost, well, and interest rates go very low, then we are talking about an inflationary episode. And so, if we get there, I fully expect markets to react strongly. But it's just, it's a risk that's out there, and it just still feels maybe to investors like just not possible. But unfortunately, I think it's a real risk, and the risk is rising.
Yeah, Claudia, just quickly here, if that does happen, where do you think investors are going to shift their assets to?
Yeah, I think this will be a very messy adjustment if we get there. And it also, the expectations of inflation taking off, I mean, should build in very quickly. But it's as with the tariffs, it's not like it shows up the next day, right? It's a process. Like it would, we could have in the macroeconomic effects of it could be pretty subtle in the beginning. It's more that, in the US and around the world, when politicians take control of monetary policy, on average, usually it goes to a bad place in terms of higher inflation and more financial and economic instability. So exactly what that would look like, I don't know, but I really don't want to see it happen. But, like I said, it's a risk, but I think it's actually, we're at a point now where like it's a real risk.